Imagine being 19 years old and losing $10,000. It's not that great of a feeling, but I learned a lot of lessons from it and I wanted to share them with you today, so you don't make the same mistakes I did. But before we get into it, I'm curious to see if any of you have made stupid money mistakes, so comment them down below. Hey everybody, my name is Hisham Khan and welcome to Income Over Outcome, where I give you college and personal finance tips. Now all this started when I got my first real job the summer after my freshman year of college. I was getting paid like $10 an hour to sell insurance, and I also got paid in commissions whenever I sold a policy, and that was really nice. Most people making $10 an hour at a summer job would probably waste a lot of it hanging out with their friends and spending money on food and things like that. But this shouldn't surprise you at all. I'm really big into saving my money, and I didn't have any real expenses since I lived at home with my parents. So I was able to save literally every single penny I earned. By the end of the summer, I had around $6,000 in my bank account, and I felt like Jeff Bezos because that was the most amount of money I ever had. Give a 19-year-old a little bit of money and they're bound to make some stupid decisions. This was around the same time that day trading started to come out. YouTube was full of these millionaire gurus flexing their Lambos, talking about how they got rich because they started to day trade. Now I knew buying their courses would be a complete scam, but I was still super motivated to make money, and honestly, I was impatient. I didn't want to wait 10, 20, or even 30 years to build wealth. I wanted to make money as fast as possible so I could still enjoy what I had while I was young, and I'm sure some of you might relate to that. So of course I started to learn about day trading by myself. I joined a bunch of these day trading groups, learned these chart patterns, and opened up the classic Robinhood account. I started off real innocently, day trading with just $5, and the first day I made one whole dollar. That's a 20% return, so I figured if I'm so good at it, might as well just put more money in. The next day I was trading with $50, and then the day after that I put in $100. The adrenaline rush you get constantly watching your money go up and down while you're day trading is like nothing else I've ever done before. Honestly, it's pretty similar to gambling, and that's why you have to be super careful. The more money you're trading with, the bigger the adrenaline rush is. Within a month of me starting day trading, I was in at over $3,000. I had a pretty solid strategy that worked out most of the time. I would research stocks for the upcoming week based on what news there was to see if there could be a breakout, and then I would research each individual stock and slowly start putting money into them. I would also always set up stop losses so that if a stock price suddenly went down, it would automatically sell and I could lock in my profits or only lose a few dollars. And honestly, that's the key to not losing a ton of money when you're day trading. I had a handful of trades that doubled and even quadrupled my money, but usually I didn't put a lot of money into them. There's a handful though that made me a ton of money dollar-wise. I remember one of my biggest was this pharma company that made me $1,500. You can see I started off with just about 25 bucks, and then I slowly started to add in money. $80, and then when I saw there's a lot of potential, I added in thousands. I know this video is a little bit different from my usual content, but if you enjoy this, hit that like button and I'll make more. I had a few amazing trades like that, and eventually I doubled my initial $3,000 I started day trading with, but I still knew how risky it was. So when that happened, I took out my $3,000 from Robinhood, so now I was playing with pure profits. If I lost all of it, it wouldn't matter to me at all. And day trading on Robinhood is actually even riskier. A lot of people don't know this, but their prices actually lag a few seconds behind the big brokerages. That's how they can keep it free. So you're competing with all the people who can trade in real time, and you're never really getting the best prices. But anyway, now that I was trading on pure profits, I would just throw in thousands of dollars into every single trade. And when you do that, every single second really does matter. A tiny change in the stock price is hundreds of dollars, especially with penny stocks. That's why you need to use a solid brokerage like TD Ameritrade or Charles Schwab. I have no money in Robinhood now for that reason. Eventually, I grew the account back to like $8,000, and there was this one swing trade I had my eyes on. And honestly, at this point, day trading was getting kind of old. So I was like, what the hell? And I put in $7,000 into this one trade.
You're so dumb. You are really dumb, for real.
Now around the same time, I had a trip planned to Europe. So I remember I was sitting at the airport looking at Robinhood and the stock had doubled my money. It was at $14,000. So I changed my stop loss and I hopped on the plane. But I couldn't access my Robinhood account since I was overseas in Europe. So I had no idea what my actual profits were like. Now this was a month-long trip and I totally forgot all about day trading when I got back. It took me like a week or two to check my Robinhood account again. And when I saw it, I was shocked. My Robinhood account was sitting at $3,500. That's close to $10,000 lower than the last time I saw it. And I was so confused as to why that was. Apparently, I never actually added a stop loss in. I was in such a rush, I removed my old stop loss but forgot to put in a new one. That stupid mistake cost me $10,000. And honestly, it hurt a lot because if I had that money, that would have been amazing. But it didn't really have a huge impact on me because I was smart in making sure I set up my account in a way that it wasn't losing money that actually mattered. I wasn't trying to make a living off of day trading like a lot of people try to do. It was all fun and games. And honestly, I was really starting to get less and less interested in it. Even if I didn't lose all that money, I probably would have stopped anyway after I got back from vacation. There's a lot of really valuable things I learned about money and investing through my time day trading. The most important thing is that once you start earning money, no matter how little it is, don't blow it. Use that money to make you even more money, or else you're going to have to work until you're 65, and you probably don't want to do that. Even though I was only earning $10 an hour, I saved as much as possible and tried to learn how I could use it to make even more money. Most people don't do that, and that's a huge mistake, especially when you're young. Number 2 is that day trading isn't a sustainable way to make a living. Sure, some people make a decent amount of money off of it, but you have to treat it as a full-time job. It takes hours to do research and learn how to trade properly. For any other job, that would be just fine. But the issue is, it's still a game of luck. There's so many things that are just out of your control. The amount of time it takes day trading is much better spent learning high-value skills and building businesses that can actually give you a sustainable income and grow over time. There is a reason all of these millionaire gurus start selling courses, because they know day trading isn't sustainable. They can't do it forever, and the passive income they make off those courses is way more than the amount they make day trading. Because day trading took so much effort and I stopped seeing the value in it, I started to look for more passive ways to make money, and I found that long-term investing is the key to growing wealth. Way more people have gotten rich by proper investing than by day trading. And if you're in your teens or 20s, now is the best time to start because we have time on our side. One of the most powerful things is compound interest, where the money you invest starts building on itself and grows exponentially. You can make an insane amount of money without even doing anything, but to take advantage of compound interest, you need time. Someone who starts investing at 18 and puts in an average of $500 a month will have $2 million by the time they're 60. But if a person starts investing at 30 instead and doubles their investment to $1,000 a month, they're going to have just $1.6 million at 60. And that's crazy because the person who started to invest at 30 put in way more money, but they were invested for less time and compound interest wasn't working as hard. The easiest way to invest is to put your money into S&P 500 index funds. When you buy one of these, you're buying a piece in every single stock that's listed on the S&P 500. The best part is they're always evaluating if they should add or remove any stocks to it, and they have really high requirements. That's why the S&P 500 always goes up in the long run, and it's nearly impossible for a normal person to beat the returns of the S&P 500 by choosing their own stocks. The main thing you need to know is to invest in low-fee funds, because those can really eat into your returns. I never invest into a fund that has fees more than 0.05%. Now, the S&P 500 has gone up around 60% since I started a day trade. So if I took my $3,000 and just put it in a fund, I would have $4,800 today without even doing anything. I definitely prefer just sitting back and watching my money grow instead of trying to beat the market. My day trading experience honestly wasn't that bad because I didn't lose any money and I learned some really valuable lessons. But most people aren't that lucky. Day trading is great if you want to learn how to invest and have a little bit of fun, but don't expect to make a career out of it or get super rich. You need to have the time and make sure you're smart with it, or else you can lose a lot of money. If you still choose to day trade, then make sure you're only doing it with money you're completely okay with losing. That $3,000 I put in was really risky, but I was fine if I lost it all. And finally, never invest based on emotion or greed. At the end of the day, that's what got got me. If I had just sold my stock before I hopped on the plane, I could have made a ton of money, but instead I was greedy and ended up losing a bunch. Thanks for watching. Click here to subscribe if you haven't already, and feel free to check out one of these videos. I'll see you next time, but until then, peace.